Ladies and gents, Professor Meatball is here with us, and we need to understand everything that you, moving into the weekend, need to know about GME coming forward. Thanks to Uncle Home Depot Hank69 coming in here, giving us the DD dump you guys need, but also some price action first for GME, because when we saw this epic rip from 170 all the way to 179, that's a $9 rip. And from there, we have actually started to create a new level of resistance. So first of all, if you guys are wondering what these teal lines are doing and how I decide they go on here, I'm looking for majorly 3 touch points, especially when there's price action that can't be explained, such as being rejected early on in the beginning of the market open at a brand new touch point. This is 178, and that is going to give us another touch point down in the end of the trading day. So from there, we were losing our momentum, but we came up on top at a high of 179.24, 3.6 million volume. Honestly, not great, but it's still substantial for the amount of price action, right? Because even with less than half of even with, how much is this? The average is not 20 million. So that's less than 20% of the total at 3-month average for GME in terms of volume, and we were still able to have some pretty substantial price action. I'm also going to explain by the end of the video what this suspicious $63 million worth of puts is doing here on Option Sonar. This is the most we've seen deep in the money puts on GME as a put wall at $300 strike. So for all of that and more, stick to the end of the video. I'm going to go fast. I'm going to be giving you guys what to pick out from Uncle Hank's DD. Make sure to go down to the description, give him a fat thumbs up, because we have dug into a lot of his DD in the past, including that Iliad, which he sent directly by email to this show. So if we haven't quite yet gotten to 1,200 likes on this video quite yet, then go ahead, comment out which like you are, and as your duty, let's get going. First of all, I have to tell you, I think this is Steve Buscemi. I don't think that's Gary Gensler, but I think the rest of you know that. So this is a quick intro about what kind of data DD dump there is going to be. COVID-19, Jerome Powell, and January squeezes. They think that everyone, us and Wall Street included, has brushed off just how crazy the end of January was, right? 5 stocks had squeezed to double the value. This is just a quick setup of, if you guys don't know much about what happened to GME or AMC, this will get you pretty much all the way into the story. So that is a brief history. And COVID-19 and how COVID-19 relates to the overall trends here. We also have a chart to give you a picture of the volume and the short volume of the SPY, S&P 500, one of the most commonly referenced ETFs out there that holds 500 of the most stock, right? There really isn't a formal definition of bigness, but 500 of the biggest stocks here. Obviously, this does not give a full picture of the market, but it does give you a general picture that shorting increased dramatically during the COVID crash. So yeah, they shorted. They shorted a lot, and it makes sense. It was rational. Remember how they said that certain struggling companies would be pushed to the brink of bankruptcy? Now a great shorting opportunity. So they shorted BB, COS, EXPR, Nokia, AMC, and GME extensively. They were trying to make a lot of money. Then Jay Bao comes in here, boom, boom, boom. He is printing out the money. He turned on the money machines an unprecedented amount. So here is a source from the Board of Governors on the Federal Reserve System, right? Billions of dollars coming out of that money printer from 2008 all the way into 2020. And grayness, I believe, is periods of recession from the last time I've read one of these charts. So no one saw that coming. They mean that people don't take the time to realize that the market is literally $100 higher now than it was pre-COVID, and we haven't even fully reopened. Nobody could have predicted that. So why does that matter? Well, In their opinion, this observation highlights an absolutely terrifying market situation. We all know that naked abusive shorting has been around for a while. In fact, the last video that I mentioned that was mostly about AMC, but also involves you guys, GME, Friends, and Apes, because the first SEC lawsuit against hedge funds for naked shorting has now come into play as of 2 days ago. So we're looking at Gary Gensler actually taking moves, not Steve Buscemi, Gary Gensler taking moves to change the game here. Let's see. There has been great reporting in the sub by the repo market, which demonstrates liquidity issues. Liquidity issues are insanely dangerous in today's market conditions. The Fed has been aggressively pursuing quantitative easing policies when it buys bonds and other assets to help stabilize prices. All of this is summarized in the Everything Short and the House of Cards DD, of which we had an exclusive interview with Austin Tobit, and part 2 is on the way. So we'll have him back on the show when part 2 drops. It terrifies them because it means that institutions are over leveraged because of the easy money interest rates, and we are nearing a liquidity crisis, and inflation could force Fed to hike rates. What happens when all of these things meet? The house of cards falls. So let's say that there's an economic downturn, not a collapse, not a recession, not a depression, but a significant correction. That will lead to margin calls, the big squeeze, right? And if you get a margin call, you have a significant short stake in, let's say, GME, right? That would make you ducked. Let's make it clear. We should not be praying for the economy to collapse. A collapsing economy means people lose their jobs, pensions, and people die. So this is not what we're hoping for. We are praying that eventually the government steps in or regulations step in that makes it so that we can orderly cause a squeeze and the greatest transfer of wealth possible without hurting everyone else participating in the markets. So that's the main problem here. We are already setting us up as scapegoats. We saw that interview with Kenneth Griffin from weeks ago, maybe months ago at this point, where he was going to point to the stimulus checks and at you for causing whatever economic disaster that's coming up soon. And you're probably pretty sure that all you did was buy and hold a stock. Their DDs have been laced with comparisons of the SPY, VIX, and GME. So they have a negative, GME has been having a negative beta, which is inversely proportional to the SPY. That's all you need to know. People talk about negative beta all the time, just means that it trends inversely to the rest of the stock market. However, it does seem that GME is consolidating to earnings and the annual meeting coming up very soon. Obviously, this could be broken at any time, or they could be wrong, because here is what they drew for GME. There's a downtrend coming down here from March. So this March 19th here. So this is a downtrend coming from March's gamma squeeze and the wedge lining up right around that blue question mark here. So the earnings is coming soon, and June 9th is also the annual meeting the very next day. So 69, that's very nice. Those of you who popped a quarter, whoa, I can't read any of that. It would make sense for GME to consolidate up to this point. Last earnings, we saw a big move. This earnings, however, comes before the meeting, which is significant, right? Because we're now looking at two major catalysts happening, one after another, with the FTD cycling, which we covered yesterday, converging next week. So within the next 3 weeks, we have some major moves in terms of just picking out a new CEO, right? Picking out a brand new leadership, GME making fat moves ahead. And that's what you needed to know for today. So midday volume spikes. We also talked about this in a previous live stream here, but we have best actual new DD that they have in the post. They said in many of their DDs that the random midday positive volume spikes, they always notice them, as many as you do. They never took the time to document them or to do anything with them. So here is a table of those spikes from the past few weeks. The commonalities in all of these is that they are positive volume. They are the highest candle on their given day by a mile, and they happen between 11 a.m. and 2 p.m. So this is from a few trading days, so it's by no means exhaustive, but they went through and looked, and this has been happening for a very long time and is consistent and common. So this is two of the main takeaways that you need to understand. One, we are looking at significant midday volume spikes, which is once again consistent with my theory that once the hedgies are not paying attention to the price of the stock, the true price really does come out. That happens during no man's land during midday when the stocks are at lunch. This happens roughly around noon EST or around 9 a.m. my time, and it also happens after hours, which is why we watch these price movements so closely around power hour and after hours nowadays. Closing thoughts, right? You guys can take a look here. Too long didn't read. Hank is back. Thanks for your patience. Look closer at the January squeeze. Group of stocks moving in unison. Not a coincidence. So thank you, Hank, for this non-financial advice, and thank you watching for getting to this part of the video. If you want to be able to also take a look at option sonar, to just take a look at this put wall. We've explained put walls on this show before, but this is one of the largest ones that we've seen in a long time. So expect more at 300 strike. This is the last time we saw this was around like some 20 or maybe even 30 some $million worth of puts at 300, and then the next few days we saw millions more. So it's not like this is going to be an isolated movement. Thank those of you who support the show with your hard-earned tendies prior to that squeeze, because we're going to be sharing in some hard-earned tendies when that squeeze actually happens. This shirt is 15% off on andrewmomoney.com, including mugs and socks and new diamond toe flip-flops. And if you guys didn't know, you can get 2 free stocks on Webull with the link in the description, or $250 of free Bitcoin with the BlockFi link in the description. We'll see you guys in the next episode. Peace.